Welcome to today's lunch panel discussion, Sustainable Food and COVID-19. I'm Deborah Honig, a partner at Adelaide Capital, an investor relations firm specializing in small cap Canadian listed growth companies. Today I'm joined by Brent Charleton, CEO of EnWave Corporation, Steve Bromley, CEO of Organto Foods, and Jack Baker, one of the co-founders of Wilo Probiotics, which is still private. The format for today will begin with a brief discussion of each company, a brief introduction rather, and a quick overview of how their business is being impacted by COVID-19. After the introduction, we'll open the discussion up for questions. All participants' mics have been muted, so please type your questions into the Q&A box at the bottom of your screen. If you wish to ask your own question, you can message me directly, or there's a raise your hand button, and I will turn on your mic. We will keep this session to an hour framework just to be respectful of everyone's time. So thanks again for joining us. And with that, I'm going to introduce each of our three participants in order. So Brent from EnWave, why don't you start with an introduction of EnWave?
Sure. Thanks a lot, Deb. So for those that don't know the company, EnWave Corporation has successfully commercialized a patented vacuum microwave drying technology that offers its users in the food, cannabis, and pharmaceutical industries a faster, less costly way of producing high-quality, innovative end products. We call it Radiant Energy Vacuum, or REV technology for short. Our business strategy is to sell industrial processing equipment, cost plus, and license our intellectual property through a royalty business model. We currently have over 35 licensed royalty partners, including companies such as PepsiCo, through one of their wholly owned subsidiaries, Bear Snacks, Arla Foods, which is a top 5 global dairy company, Gailey Foods, a well-known dairy cooperative here in Canada, Aurora Cannabis, and Merck Pharmaceuticals, among others. Many of our partners have leveraged REV to produce highly innovative snacks and ingredients that are shelf-stable and nutritious, which aligns well with today's discussion. Prior to hitting our commercialization inflection point, we strategically started an operating company in 2013 to showcase the value proposition of REV. NutraDried Food Company is its name, and it sells moon cheese, which is a delicious, crunchy, natural snack product that is widely distributed in over 25,000 points of distribution in North America. This proof of concept operating company has now grown into a successful snacking CPG growth entity with plenty of upside. Our consolidated revenue in fiscal 2019 was about 43 million Canadian, and 29 million of that was generated by NutraDried. We're targeting growth in both of our businesses long term, but again, as we'll discuss today, have been challenged by certain COVID-19 restrictions that are present. So that's my overview of EnWave and current challenges that we're facing.
Thank you very much, Brent. Steve Bromley, do you want to take us through Organto Foods?
Yeah, sure. Thanks, Deb, and good, I guess, afternoon for most people. Steve Bromley, I'm the CEO and chair of Organto Foods. Been in the Canadian food business for about 35 years. I assumed the chair role a couple of years ago at Organto, and I've been working as CEO as well. So appreciate the opportunity to talk to you today about the company. And these are crazy times, so I want to wish everybody safe and health, and we'll all be back together sometime in the not too distant future. So Organto is all based on the concept that healthy living and healthy eating isn't going away. We are an integrated provider of organic fresh fruits and vegetables. Fresh and organic is the key, and we're playing and addressing fast-growing global markets as people, as consumers, are looking for healthy, nutritious, sustainable, and transparent foods. And while I'll get into it a little bit, that really hasn't changed dramatically during COVID-19, although there's been some supply dynamics that we'll talk about. So healthy living, healthy eating, fresh organic fruits and vegetables. We have an integrated platform, but we have an asset-light business model. And our asset-light business model has been repositioned over the past 18 to 24 months, and I'll talk a little bit about that. But essentially what we do is we source organic and specialty fruits and vegetables from growers in Latin America, in Africa, and in Europe, and our grower base continues to expand. We use our certification, our distribution, our logistics, and our go-to-market expertise to deliver those products to end consumers in the European markets. So today, we deliver our fresh fruits and vegetables to 10 countries in Europe, sourced from the locations that I talked about. And so what are those fresh fruits and vegetables? On the fruit side, avocado, which is growing like crazy. I have to admit, personally, I had no idea about the health benefits of avocado 5 years ago compared to today. We do blackberries and blueberries and mango. On the vegetable side, organic asparagus, ginger, green beans, snow peas, etc. All of these crops are generally hand-picked, so they're not easy to pick on a large-scale basis. So we have this integrated model, asset-light, sourcing from around the globe and delivering currently into the European markets, 10 European markets to be exact, and that continues to expand. COVID-19 has been really interesting. March was our largest month so far in 2020. So we've seen the demand. Europe, just on the side, Europe is about 3 to 4 weeks ahead of what we've seen here in North America. So by the time March came around in Europe, we had many countries, Italy, France, etc., in total lockdown. We've continued to operate through that. What's been really interesting is that in the initial pantry loading and stock up phase, the massive demand was around dry goods, toilet paper, soups, shelf-stable food products. Demand for fruits and vegetables increased during that time period as well, but not at the rate of some of those dry products. What we've now seen is the demand for those products, while still high at retail, have dropped off a little bit. And demand for fresh products, fruits, vegetables, dairy, is actually up at retail. And our whole focus is at retail, so we've really benefited. So it hasn't got any easier to do business during COVID-19. Supply chains are still operating. Governments are mandating and focused on keeping them open. If anybody tells you they're operating perfectly and there aren't challenges along the way, they're probably not telling you the truth, because there is. But we've continued to supply and continued to have good demand from our retailers. So, and the nice part about our asset-light business model is we can shift growing regions. So, I'll use avocado as a really good example. We were sourcing from Morocco. And Morocco's great because it's quite close to Europe and we can get the product there quickly. That season has wound down. As the season was winding down, we sourced out of Kenya. The channels were good there. And now from there, we've switched into Colombia and Peru. So we have an adaptable model so we can keep product coming to market. So, that's our business. The last thing that I want to mention is our brand is the I Am Organic brand. It's a fabulous brand, and we do both branded and private label. So to summarize, we're in the healthy living and healthy eating business. Our products are fresh organic fruits and vegetables. We have an asset-light business model. We source from many countries around the world, and we use our expertise to bring those to markets. We're currently in Europe. We see a huge opportunity in Europe. We'll move out of Europe soon. Well, not soon, but when we finally have tapped out that opportunity, which we don't see in the near term, we can move to other markets. And we have the I Am Organic brand supported by a distributed and private label product offering. So with that, I'll turn it back to you. Thank you.
Thank you, Steve, for that overview. Jack, do you want to give us a brief description of Welo and the origins of the company?
Yeah, of course. Thank you, Deborah. And again, happy to be here to speak along with two great companies that just spoke before. A little bit different from my perspective. Wilo is a smaller consumer goods packaging company that's focused on probiotics and better for you functionality within this consumer goods space, where a relatively young company in terms of our company lifespan. We're about 4 years old, but within that, we've grown what we consider relatively fast in the Canadian market. We have strong retail partnerships with a lot of the major retailers in Canada, distributed in about 1,500 stores across Canada, with partnerships with Loblaws, Bulk Barn, Metro, a lot of the major retailers. Our products primarily focus on probiotics and the functionality around better for you. Really, we wanted to concentrate with the products on delivering the probiotics in the best form that we consider for functionality, that being low sugar, minimal ingredient lists, and really whole foods. We have a 40-gram probiotic bar that has 3 billion probiotics per bar. It's a vegan strain that's dairy-free as well. Within that, we've expanded into the kids market that offer a kids probiotic bar that has 1 billion probiotics per bar. It's sold in a 5-pack. And as well with that, we have a peanut-free variation of the kids bar that is in the retailers across Canada as well. Obviously, with the changing times, we're adapting and changing to the market. Although we may not see some of the same obstacles that larger companies see with COVID, we are seeing some changes in the retail space and at a smaller level. So we'd be happy to share some of those insights to see how those could affect similar companies to my size, especially in potentially early stage investment and seed investment into startup food companies and brands.
Thank you very much, Jack. So I'm going to kick off the Q&A period. If any of the attendees want to participate, just punch them into that Q&A box. But why don't we get started on some of the major themes? So one of the changes that I've noticed in the market, or at least have perceived through reading and newspaper articles and my own experience, is that there's been a change in the market where it's shifted to predominantly retail because most restaurants are closed except for delivery and takeout. So with the international quarantines in place and most restaurants shut, food is being purchased predominantly at that level. So this should positively impact everyone's business on this panel as you all sell into retail channels. So I guess my question is twofold. Have you seen an uptick in sales, and have you seen any changes in what's being ordered through these channels? So why don't we start with Brent?
We did see an uptick in sales in retail grocery channels for March, and we expect that to continue through April and for as long as this scenario continues to intensify. For certain channels, though, it has been a challenge because certain stores have shut. So Starbucks, as an example, have shut down a number of their brick and mortars and have now gone to drive-through in a select number of locations. So that has not been a positive development for NutraDried. But we know that once we get through COVID-19, that will rebound and we'll be back in a very strong position in all channels for distribution. I've also noted that in terms of the type of products that are being purchased and in the retail grocery channels, it tends to be, as Steve mentioned, dry goods. So you're looking at pastas, rices, and to an extent, milk and eggs as well, which are up, I read in a recent report, 800% from its typical churn. Velocities for us in, again, the 25,000 points of distribution that we have already won in North America have also improved. So we're in I think, a nice, strong position in that the work that was accomplished prior to this pandemic will benefit the business in the near term.
Yeah, very consistent with what Brent talked about. We saw a huge uptick at retail, which that's primarily where our business is. So, we saw the run up. As I mentioned earlier, the run up wasn't as high on fresh fruits and vegetables as it was for dry goods. That's now evolving and changing. And, demand is double-digit up versus anything we had in the past. It's been interesting in the product mix. Frankly, retailers are looking for everything. But what's really been in demand are some of the high vitamin C products. So while not core to our product offering, we've been asked for lemon, lime, in those sort of products. And so we've actually done some work in those categories, especially around lime. Those have been the major changes. Frankly, the interesting part of retail is sort of watching the retailers try and figure this out, because they went from the holy smokes, get us anything you can, to, oh, now I've got a lot of some of this stuff, and so now I'm getting into normal routines. The way it described to me was that retailers spend 6 months planning for Christmas or Thanksgiving or whatever, and they had 3 weeks to plan for bigger season than what would normally happen then. So, anecdotally, retail way up, food service way off, demand strong across categories, with some of the healthier perceived categories really in demand. We're not in all of them, so we can't participate in them all, but where we can, we're doing our best. And we have growers that we're associated with that may have some of those products that we don't actively stay involved in, but we're doing what we can to help facilitate product into the markets as well.
Very similar to the other answers that were communicated earlier, is we did see a larger upkick. I think when all of this started to unfold in March, we had sales double for the second half of the month. It is still fairly early for us to see how that's going to play out, but I think the retail volume from our side has slowed down a little bit by mid-April. I think that could be potentially due to the nature of our product, as we are a newer brand. We're not yet established, so we're still trying to get our name out there, and that may affect the consumer that's walking around with the essentials list. So we're still kind of seeing how that will play out, but at the end of the day, we are still looking at other avenues to work through the revenue gaps, and we're seeing a large upkick in our online sales model with ordering direct to consumer and trying to capitalize on that market as best we can. Well, we have the attention of consumers, especially when you have a lot of disposable time at home or through the social medias and platforms like that. So it's still early for us to tell, but there definitely is some changes that I think are occurring in the consumer buying patterns due to COVID. So that's where we see from a smaller privately held company side on the retail space.
Okay, thank you. So just moving on to supply chain and trade disruptions, a lot of what we've been reading about is logistical bottlenecks. So let's talk about that for a minute. All of your businesses rely on access to ongoing supply of key products. So for NutraDried, that's cheese, and for Organto, that's fresh organic produce, and I guess for you, Jack, it's the same. Have you seen disruptions to your supply sources or the ability to ship product from these sources to your facilities? I guess we'll just go in order again. Brent, if you want to start.
Sure. Yeah, start with NutraDried. No. So the suppliers of cheese actually have a glut of raw material, and subsequently cheese prices have dropped dramatically over the past month or so, and going from about $1.90 per 1 pound block to approximately $1.10 US per 1 pound block. In the dairy industry, producers are literally pouring milk down the drains as the food service customers have dried up, as hotels and schools and other users in that particular channel are not buying the product anymore, been decimated by COVID-19. So on the NutraDried side, not at all. And same thing with EnWave. Even the componentry that we're purchasing, stainless steel items, vacuum pumps, et cetera, for our machines, there's been zero disruption in purchasing that to supply and build our machines for our partners.
Interesting. So I was reading an article on the weekend that was talking about in Wisconsin exactly what you're saying, that farmers are dumping thousands of gallons of fresh milk. And I think they also reference farmers in Idaho disposing of millions of pounds of onions, and the same in Florida, with them just devastating like perfectly good fields of crops. So I guess like coming back, are you seeing any benefit from that? Are you able to source cheese or inputs like faster, cheaper?
Right now, NutraDried is still working through inventory has been built up that comes with a higher COGS. But certainly once that inventory is worked through and the raw material that's purchased at these lower prices will benefit us greatly. That's no doubt there.
Yeah, because you could take expiring material and keep it shelf stable for up to like a year or two, correct?
Yep. And so, I mean, in a more broader sense, our technology can apply to many of these companies that are stuck with a huge amount of perishable raw material and allowing them to create shelf-stable, nutritious ingredients that can then be sold at a later date. That's where we see the most near-term market opportunity for EnWave's machine sales and deployment.
Okay, cool. Well, I guess that kind of answers the three questions that I was posing. So, Steve, on to you again. Are you seeing any disruptions in your ability to ship goods to your customers? And the follow-on questions have to do with where are you seeing the most impact, and are there opportunities to capitalize on any of these shifts?
Yeah, so, Deborah, I think the first point is that, the good news through COVID-19 is that people need to keep eating. And the governments are quite aware of that, and they've prioritized supply chains, food supply chains being, very, very critical. So, supply chains haven't got easier, and, if you're bringing organic avocado from Morocco, those trucks are flowing, but it takes longer for them to cross the borders. There's the challenges. And so sometimes the shipments are right on time. Sometimes they may be a little bit late. Clearly containers and the flow of containers around the globe is being carefully managed. We have 4 containers of avocado from Colombia on the water to be received by us next week. We received one this week. So it's happening. I think if Rinks was here, he'd say, traditionally, if a container is supposed to be at the port between 11 and 9 o'clock, add another day to that either way, just given the challenges that are happening. But that's very, very manageable. Air freight, a lot of fresh produce travels on commercial airliners. They're not flying, but the cargo is. And cargo is shifting around, so there's room. For example, in Kenya a couple of weeks ago, one of their exports is flowers. Well, nobody's really worried about flowers these days. So there's lots of room. There's room freed up on cargo for fresh produce because things like flowers aren't traveling. And then I think a key issue, and we're all watching it very closely, is labor and field labor and picking labor. And there's huge safety standards that have been put in place so that we can continue to get crop picked. And I think that'll be something that we'll have to watch long term. But the last thing growers want is for their crops to be rotting in the fields. Many of our growers have quarantined their farms and quarantined the pickers and the staff in order to protect those. So I think, look, the supply chains are operating, and they're operating well. And when you go to the store, lots of stuff is in the stores. Something that we're monitoring every day. And underpinning for us is our flexibility, in that if we do see challenges in a given market, we can shift supply to other markets. And we've been doing a little bit of that. But all in all, look, the supply chains are operating. And I think the final testament that I tell you is we source organic asparagus from northern Italy and have not missed a shipment during this entire period. So supply chains are working.
Jack, same questions to you.
Yeah, I think in all honesty, I think Steve answered that very thoroughly and very in depth. From our perspective, a lot of our products are manufactured in a co-manufactured space, and I'm in constant communications with them to keep up to date with what kind of they're seeing on their end. And there hasn't been any hesitation from their end or any concerns, and they're looking in the future and planning for scenarios that may not have already occurred. But I think the way that Steve articulated it with outlining that they are strong and that these are the experts in their fields and they're taking their precautions and they're doing what necessary, and it's still operating. So it shows that there's longevity to the food system, and COVID is just something that we all just have to deal with right now.
Okay, thanks. And we had a follow-on question from the audience. So Brent, can you discuss whether it's possible to lock in cheese prices?
Yeah, certainly. So the
these
executive
levels for the
management team
medium
that
and short term?
are running NutraDried certainly are evaluating opportunities to hedge pricing and to lock in lower cost at the moment. So that's an ongoing fluid strategy that is being employed in collaboration with our CFO at EnWave here. So yes, we are actively trying to manage the cost of raw material for that business.
Okay, great. Thank you. I just had one other line of questioning before I start taking more of the audience questions. So it was really around the trends that we've seen in food over the last 5 or 10 years. I mean, we've addressed it in a variety of different ways. I just kind of wanted to open it up for a more specific question about, are we seeing any shift away from healthy, organic, keto trends or clean label, which is something that applies to all of you? Or do those trends remain intact? Is it a permanent shift, do you think, a medium-term shift, or just right now? So I guess I'll start with you again, Brent.
I think it's too early to tell. To be honest, we're only, a couple months into this pandemic, and the long-term financial impact for the various demographics in our society is not yet fully known. What I predict, though, is a bifurcation of, the haves and the have-nots. To be frank, those who will make it through this scenario. Not unscathed, but still in a strong position, will still, I think, tend to pursue the organic options in the marketplace, healthier options, grab and go. I think the keto trend is here to stay. However, those who are hit more significantly may not have the option, and out of financial necessity go back to less healthier options. So I think there will be a greater discrepancy between purchasing decisions in the space, and that will influence new trends to complement the ones that are already in existence.
Yeah, that makes a lot of sense. Steve?
Yeah, listen, I think Brent has really hit it head on. We all will have to do some learning. Clearly the trends were dominant before with healthy eating and organics and keto and, everyone in the world paying more, not everyone in the world, but a large segment of the population spending a lot of time paying attention to what they eat based on the lifestyles that they were looking for. I think as we've gone through COVID, we've seen the demand remain strong for product. We believe that it will continue to remain strong. I think Brent makes some very interesting points on there are some people that may not be able to afford it, but frankly, the traditional healthy consumer is probably going to come through this fine. I think healthy eating has a lot more resilience in it than maybe getting back to restaurants, and not knocking the restaurants, but I think, people are eating at home and paying attention, and that will continue. We all have lots to learn, and I can tell you we're learning, and I'm sure Brent and Jack are doing the same thing. If you think you have all the answers today, wait till you turn your computer on tomorrow. There'll be something in there for you to digest. And at least I know that's the way it is for us, and I see Brent nodding his head. It's probably the same. Like, we're all learning, but fundamentally, I believe healthy eating will remain a priority long term.
Yeah, agreed. Thank you. And Jack?
Yeah, I think, again, they both reiterated kind of how we feel and what we're seeing on our end. I think there will be some changes due to the economic effects, like Brent had communicated, but I think we will come out of this and healthy, better for you, functional foods. I think people will have more time to look, and health is one of the main topics. Again, there is some negative sides about it going with the topic right now, but I think people are going to have time to look and be introspective that health will always be something that should be forefront, and that the consideration of what we're putting into our boxes that we're making will be a topic that will be continued to be spoken about after COVID and moving forward, that it's a more of a precautionary step, that if individuals and better healthy and better choices in terms of the food variety, I think that it will help shape the consumer goods market in the functional food space. It, again, is too early to see how that will play out. But again, it's something that I think is important to keep an eye on moving forward. So it will be very interesting, but I do think that there will be some interesting trends coming out of it.
Great. The only other last final question that I had was around buy local. So we saw this trend developing before the crisis. I think, one of the lessons that's going to come out of this epidemic is a shift towards isolationism and reduced globalization, at least in the short term. So how do you see this impacting your business, and how is the trend buy local impacting your business before the crisis, if at all? And we'll just go with Brent again. Keep it consistent.
Okay, thanks, Debbie. I'll start out with NutraDried. I think that change will benefit NutraDried as it is a national premium snacking brand in the United States. So for our operating company there, I don't see any negatives to that effect. And also internationally, for EnWave Corp, with a number of international partners operating in different continents and commercializing different types of ingredients and foodstuffs, I also see a benefit. I think that the opportunity for them to exploit the competitive advantage that they have through the use of our dehydration tech can put them in an advantageous position. And hopefully with the support and interest of eating healthier and procuring, again, domestic product will lead to future royalty growth for our business.
Okay, thanks, Brent. Steve?
Yeah, listen, I think buy local for sure. I think your comment that that will go up and intensify when we exit COVID-19, I think is reality. For our particular company, we buy local when we can. I use the example of asparagus from Italy for the European markets. We do buy in the local markets when we can through strategic growers. The reality is, if you want avocado, it's not going to be bought locally in Europe other than, when the Spanish season is on or you have Morocco. So our philosophy is to always have sources as close to local as possible, keep the carbon footprint down. But the reality is that products have to come from other markets, and we're positioned to do that. So we're flexible, and we'll go where the supply is and get them to the market. But I do think that we're going to see countries protecting more, and we'll have to be more aware and prepared for that.
Okay. And so, Jack, sorry about that. Please.
No problem. Oh, of course. I can only speak anecdotal about this. We produce all of our stuff in Canada, and we're primarily focused in Canada. So again, I think it will always still be a trend. I can't speak on it. I'm not sure really how it will play out. I think the consumer buying pattern is something that you always got to keep an eye on. I think out of COVID, it will be hard to really predict, but it could be something that consumers focus on more. But again, like everyone said throughout this panel, everyone's learning, and just got to keep your ear to the market every day, because it can change. So.
Okay, great. So that's it for the more thematic questions that I've had from the audience. Please feel free to continue to type in some questions. I'm going to ask some company-specific questions. First to EnWave. So, Brent, does EnWave have any plans or timelines for any non-cheese products in the future? If so, what are they looking at? I'm assuming they're meaning specifically for NutraDried.
Sure. So NutraDried is already currently evaluating several RevDried iterations that they potentially could add to their portfolio over the near term. So call it 1 to 2 years. And so resources have been deployed to gain some quantitative data to support the strategic decision by executive management at NutraDried. And so I'll say short answer, yes. The anticipation is that you'll see an expansion of the portfolio at NutraDried in coming years here. obviously with COVID-19 being present, we first want to navigate through this storm, and then once we can get back into some sense of normalcy, continue to pursue those new product development opportunities.
Okay, thank you. And then another question for EnWave. So Brent, EnWave is a truly unique combination of assets. The food dehydration technology has a broad scope of applications. Obviously, cannabis was a new application, but are there other food-oriented opportunities that are surfacing over and above your traditional customer base? Sorry, I don't know why I can't speak today.
That's okay. I got the question. So yes, to broaden the number of commercialized products that are being produced by our licensed partners, focus right now is on developing keto-centric snacks. Several companies have engaged with us, so we're working on that, as well as alternative protein, shelf-stable snack iterations. So of course, you've got the behemoths like Beyond Meat, and then obviously Maple Leaf Foods iteration and Greenleaf that are looking for different ways to deliver these type of raw materials to the end consumer. And then lastly would just be the continual development of shelf-stable dairy products. We know cheese is a winner, and it's easy to produce, but of course we're still developing different yogurt iteration, milk protein iterations, products like that. So that's what we're looking towards.
Thank you. And then here's a question for you, Steve. Can you compare your experience at Organto and its stage in growth to any of your past experiences?
Yeah, that's an interesting one. I'd relate it back to early days when I joined Synopta. So I joined Synopta, the company at the time was called Steak Technology. I joined as the CFO in mid-2001. The company had just started to invest in food. And kudos to the management team at the time. They were invested in a number of businesses. They only had one small food asset. It was a company that was involved in organic corn and soy. And the business was really growing. And obviously, and the reason for that was they caught the beginning of the organic soy milk wave. And we were contemplating other investments in the organic food side, but we had no money and it was hard to attract attention. But the management team at the time really believed in the category. And so we went and did a couple more transactions to give ourselves more depth in what we felt was a really fast-growing market with great potential. And it turned out to be good potential. We did the transactions for shares in the company at the time, and we felt, oh my gosh, that's very dilutionary, and are we doing the right thing? And at the time, the stock was between 60 cents and $1. It quickly moved to $5 and then $10 as we proved out the business model. So we went from having a hard time finding money to people wanting to give us money once the business model was proved out. And I think we're really in a very similar position to that at Organto. We've repositioned the business model. We've had 3 consecutive quarters of proving that it works. And it's really go time. And so it feels very similar to that. And, during my time at Synopta, we got the stock up to $15 and had, really exciting growth. And so I feel we're very much at that tipping point with Organto, and, it just feels very similar, and hopefully we'll have the same success.
Okay, thank you. And then another question for you, Steve. So revenues are very lumpy. Is that a function of the early stage of the company, seasonality, specific products? Do you expect that to smooth out?
Okay, so I think there's 3 or 4 questions within that question, so I want to try and address them. First, from a seasonality point of view, our goal is to have year-round supply, so to be able to go to more than one source of supply during a year so that we can provide products on a year-round basis. So, in asparagus, we have Peru, we have Argentina, we have Italy. Why Italy? Well, because you get into a local season in Europe and you want to be sourcing locally, and the other markets can't be as cost effective in those markets. Same thing with avocado. Peru, Colombia, Morocco, Kenya, other locations. So we try and limit seasonality, but even so, there will be some shifts in seasonality. Right now, we'd be at half of the volume of asparagus coming out of Italy that we would have at higher seasons coming out of Peru and Argentina. But for the most part, seasonality is not a real big issue with the business. As to lumpy, I mentioned we'd gone through repositioning the business. So we've gone through a period of moving from an asset-heavy to an asset-light business model. What was the impact of that? In Q1 or Q2 of this year, our revenues were really low. Then the model was in place, and we've started to move. So we did 1.9 million in Q3, 1.6 in Q4, and about 1.6 again in Q1. So revenues have gone from very low to a run rate in that range. And frankly, the only inhibitor of growing is the limited working capital that we have. With more working capital, those revenues grow significantly. We've talked about the fact that with our asset-light business model, in order to grow revenues, we need 10 to 15% invested in working capital. So if we want to grow our revenues $1 million, we need between 100 and 150,000 in working capital. And that's our limitation right now. And that's why we've recently announced that we're going to do a convertible debt issuance to provide that working capital to supercharge our revenue growth. So seasonality is not a big issue. The last 3 quarters have been records and pretty steady. And the only limiter to moving forward is additional capital to do that. We know who the customers are. Our customers want more product. We know who the suppliers are. They'll give us more. And we know the supply chains and how to do it. So it's more just working capital, and we're going to address that here in the short term.
Gotcha. And Steve, one more question for you. So you talked about fresh food demand initially declining in Europe and now coming back. Are your revenues where they were prior to COVID-19 currently? I think you kind of already addressed this.
They're higher. They're higher, and they can be a lot higher. It's not a case of the demand's not there. It's a case of we got to pay for all of this, and anybody that deals with retailers know that they're not inclined to pay you in 7 days. So those are some of the challenges we have. But March was the highest month that we had in the first quarter during COVID-19.
Can you quantify that for the audience, and then sort of elaborate what you think the true demand opportunity is right now?
With adequate working capital, and models are models, but based on the supply that we know our suppliers have, our Moroccan, pardon my destroying of Moroccan, our Moroccan avocado supplier, we took during their season a container a week, call that $100,000 in revenue. They could have sold us and provided for us 5 containers a week. Our reality was we probably had the customers for it. We didn't have the working capital, and you've got to pay for this stuff. And so, those are the limitations. We're at a $10 million run rate. $1.5 million raise puts us at a $20 million run rate. With funds raised, we would exit this year at that. With the growers that we have today, we see 40 million. And we truly believe that there's no reason why we can't grow this business to 100 million in revenue with proper working capital.
Okay, great. And one more question for you, Steve, just about talking about margins. So just generally, if you could talk about margins right now, as well as demand for branded versus white label in this environment, and are you able to push more branded products through?
Okay, a lot of questions there.
Sorry, I'll keep track of them.
Yeah, no. So first off, and for people that were involved, that may know the story for a while, in its former life, our business model was we grew all our own products and we sold those only to retailers in a branded format. The challenge with that was 1 week a farm, and these are just hypothetical numbers. 1 week a farm has 5,000 kgs of product and the retailers want 10,000. So you're out of balance. So now you've got angry retailers. The next week, we've got 10,000 and the retailers want 5,000. Well, what are you doing with the other 5,000? Well, for those that have followed our story, we didn't do a good job of dealing with those 5,000. This is product with very short shelf life. So often it got thrown out. And what we ended up having was negative margins and retail customers that weren't happy with us. So when we repositioned the business model and went asset light and went to third-party growers, one of the things we did was add a distributor white label band within our customers. So in every market that we're in, we have a distributor, a specialty organic distributor, who really aren't uptight if they get 3,000 kgs in a week or 6,000 kgs, because they've got thousands of customers that they go to the market with the products with. Why is that important for us? Because we draw what we want for our retail customers, which we can charge a higher margin to, and we sell the rest through the distributor layer at a lower margin. So if we're dealing with distributors, our margins are between 8 and 12%, call it an average of 10%. When we're drawing the product off into our branded products, they're 25% plus. So in a perfect world, as we continue to grow supply, more and more of our product goes to retailers, where we can, in a branded format, where we can increase our margins. But you have to have, and it was one of the key learnings that we had, you have to have that distributor layer in there, because they prevent you from throwing products out every week. And they allow you to develop the scale that you need to be cost efficient in the markets. So distributor layer is 8 to 12%. Branded is 25% plus, and the private label is in the high end of the distributor range, kind of in the 12 to 14% range. So in a perfect world, we want everything to go to branded. In reality, we'll always have a distributed white label segment. And frankly, we're happy to have that white label segment right now. As we work through COVID-19, we think there's great opportunities to leverage the brand, but there will be a thrifty consumer as well come out of this. And so having the white label will be important for us as well. So being able to serve all of those categories, but make no doubt about it, I Am Organic is a great brand, and the more we can sell in the I Am Organic brand, the more brand equity we're creating. On the branding side, and we haven't really talked much about this, but we're starting to work on a licensing model. We've been approached by other companies that would like to use the brand, because it is a good brand. But we've got to figure that out, but we think it is a potential other revenue stream for us. And we believe the brand will play quite well longer term, because in a post-COVID-19 world, there'll be more demand for packaged goods versus more bulk goods. And that's where you can put the brand on the package and drive that. So long-winded answer, but I hope that got to, I don't know, there was a lot of questions in there.
I think you got them all. I don't see any more questions. If any of the attendees have any last minute questions, please put them in the Q&A. And I guess I should ask, do any of you have any questions for each other? Any last things that you want to talk about, or any areas of your business that you thought were relevant to today's conversation?
I had a message for Steve. Brent, let's find some fruits and vegetables we can dry with your technology.
Exactly. You beat me to it. Technology for the I Am Organic dried product line, which I think would be a fantastic opportunity.
We now have our reason for a call.
Yeah, don't worry. I'll take my percentage to that deal too. And Jack, I'm sure that you could use some sort of drying technology in some of your bars at some point.
Yeah, I'm sure down the road we could definitely talk and cross paths, but it's been an amazing time, and I appreciate you guys.
Yeah, well,
speak along.
I'll definitely connect you all. So thank you very much for participating. I did ask a poll during the session, just something that I was wondering. I posed to the audience, how long do you think it'll be until we start eating in restaurants again? So about 61% voted, and actually 66 now, and 79% think it's 3 months. We had a couple votes for 1 and a couple votes for 1 month and a couple votes for 1 year, but seems like consensus is 3. So I don't know. I just thought that was interesting. I think that's probably right. And then with that, I would just say thank you to our panelists all for participating. If any of the audience would like a follow-up call with management, please feel free to reach out. I'd be happy to set that up. And I will say that, Jack, I believe that you're open on a financing right now. So if anyone has any interest, I can be in touch with the company, and same with you, Steve. I believe you're open on a convertible debt right now, financing. And Brent, your company's extremely well capitalized right now, so I don't need to plug a financing for you. But yeah, in the next few days, all the attendees will receive an email from Adelaide Capital with a version of this webinar and a quick survey to fill out. So I hope you take the time to fill it out. And thank you for attending this session. Stay safe.